Hey, Bulls and Bears YouTube family. It is Thursday, January 27th, 2022. The only thing that will fix the current economy is a crash. Yes, that's right. The only thing that will fix the current economy is a crash. I know that sounds counterintuitive. It sounds just the opposite of what most of you probably are thinking, but I will fully explain that here shortly. Now, real quick, our last video triggered a few people. I pointed out some uncomfortable truths in that video, and a lot of people on the right, there's a reputation that the people on the left are kind of sensitive, but actually the people on the right I find are way more sensitive. And I lost a few people in that video, but facts are facts. I tried to tell them that their hero, we're talking about the regime that was in power from 2016 to 2020, early 2021. Their hero did not allow interest rates to rise. Remember, the Fed, and I don't stick up for the Fed very often, the Fed tried to raise interest rates in 2018, 2019. But guess who was out there on Twitter bashing the Fed, telling them not to raise rates? Folks, this is not about left or right. You've got to realize this, and that's why I don't mind losing people that are that ridiculous in their thinking. Whoever raises interest rates will crash the economy, or whoever allows rates to rise, I should say, will crash the economy. And because the American people really have no clue how this thing works, that person will just get the blame. So it's not about left or right. It doesn't matter who's in the office. It's all about the manipulation, the QE, the endless stimulus, the market propping. It doesn't matter if you've got a D or an R after your name. That's what I'm trying to get you people to realize. And the sooner you realize that, the better you'll be able to benefit from this and maybe actually even profit, from this insanity that we're seeing. Right? And most of you that have been on this channel know for a while, I rarely say much positive about the Fed. But in this case, again, the Fed tried to do the right thing in 2018. They tried to raise rates, and that would have caused some temporary pain, but ultimately some normalcy would have returned to the economy and to the markets. But no, that wasn't allowed to happen because they know that this whole economy and the system is based on permanent low interest rates. And now you're starting to see some of the pain with even the hint of rising interest rates. Not because an R or a D, just because that's just the math of the game as far as how debt is settled and how debt is maintained. Also, guess who picked the current Fed chairman? I'm sorry to have to give you the sad truth on this too. If you're a righty, your hero picked the current Fed chairman, Powell. All right, so again, I'm not trying to bash anybody. I haven't voted in many, many years because I think it's all a waste of time and nonsense. So anyone that thinks I'm trying to pick on their guy or their, their group or their regime, you're mistaken. And, if that's something that you just can't understand, then it's probably best that you just go bye-bye. We stick to facts here, and we live in the real world. And if you don't like facts, then I guess this is not a good place for you to be. All right, let's get into the news here. I just had to clear that up, get that out of the way. Markets starting off pretty heavy in the green for all major indexes. We'll see if that's where they end up. We'll see if the plunge team can keep these markets in the green today. We see that oil is still above $87. Gold, silver beat down. The 10-year bond down slightly. It's still at an elevated number when you look at the previous years. And that could put more pressure on housing as mortgage rates will continue the uptrend most likely, but we're going to keep an eye on it. But here's the big story, and I guess if you want to believe these numbers, this is good news. Q4 GDP economy expanded at 6.9% annualized rate, topping expectations. Okay, for those of you that are new here, the GDP number that we are given is very, very, very flawed. The more people spend money, take out loans, and go into debt, the higher the GDP number is. Now, you tell me, do you think that economic strength should be gauged on how much debt and borrowing and spending people can take on. If you do, then this is great news for you. So all the people saying that this channel is just negative and doom and gloom, there you go. That's your good news. GDP, the economy expanded at 6.9% annual rate. Now, guess what's going to happen when it's more expensive to borrow money if and when rates are allowed to rise? Well, the GDP is not going to look so good. Now, does the GDP number make you feel better about your personal finances? Does the GDP number rising at this rate, does that help you throughout your monthly expenses? Well, again, if it does, then this is good news for you, and hooray, hooray to you. But most people are buried under debt for life, will never get out of debt. Most people live paycheck to paycheck. Most people in the U.S. can't afford an emergency expense of $1,000. We have a big surge in people coming out of retirement to go back to work because of the rising cost of living, rising prices, and they're forced to work in their 60s, 70s, 80s, in some cases all the way until the end. And if you're somebody that thinks I'm criticizing your guy right now that's in power, no, it's not about one person, one regime. This has been happening. This has been happening for decades, and it's been a slow deterioration and a frog in the pot type of situation where the water gets warmer and warmer over time, and it happens so slowly. Most people don't pay attention, and they just accept the boiling now as the new normal. But people are being boiled with debt, the rising cost of living, and eyeballs are starting to pop out of the frogs' heads and the people's heads because there's so much debt and borrowing that has to be done just to keep a roof over your head, just to maintain a average standard of living now in this country. And it's like that in many countries. Of course, we focus mostly on the U.S. here on this channel. Now, the Wall Street Journal is out there saying this following headline: prepare for an unsettling monetary tightening cycle. Unlike previous cycles, inflation's too high and the Fed isn't holding the market's hand. Well, we're going to have to see how that works out. Again, they're talking about stopping all of their purchases of the mortgage-backed securities, of the bonds in March. And if and when that happens, that's going to have major impacts. But will something else happen before then? Will there be a big surprise between now and then where the Fed's are going to say, oh, sorry, we can no longer cut. We have to resume QE to infinity, and now we're going to double it and we're going to triple it because of this awful thing that just happened. All right, I'm not saying anything's going to happen. I'm just asking the question. Please let me know down in the comments. Do you think the Fed's going to stop buying everything under the sun? Do you think they're going to allow rates to rise? Are they going to raise the base rate, the funds rate, and are they going to allow mortgage rates to rise? Will the manipulators allow things to change, or is it going to be easy money to infinity? Or will, again, another surprise happen? Some sort of situation comes up where they say, sorry, this thing is awful. We have to reverse everything that we talked about we're going to do, and more easy money to infinity. Please let me know down in the comments. Until then, stay safe, keep stacking. Bye for now, everybody.